In our tutorial 1, continuation of accounting cycle, lesson 4 is on classification of personal accounts. This is with Dr. Geoffrey Mbova of accountingnest.com. Most welcome. Now, in this case, we are looking at classification of personal accounts, whereby the diagrammatic expression below summarizes what's all about personal accounts. So we have two groups or two classes. Number 1, we have got debtor account. Number 2, creditor account. So in this lesson, we are focusing on the debtor account. So there we go. The first question is, what is a debtor account? A debtor account is a personal account which represents the amount of money the buyer owes the business in question. That is, the amount of money the business will receive from the buyer or the debtor in the future. Now, these debtors can be of different nature, can either be natural persons or an artificial persons. For example, when we look at debtor prudence, is a case of a personal debtor or is a natural person. Others include debtor Moses, debtor Caroline, and so forth and so forth. Again, it can be a case of an artificial persons whereby you can have a debtor like, for example, debtor XYZ Limited, which is actually a company, or it can be a wholesale or just a sole proprietor, such as debtor ABC Enterprises, etc. etc. Even again, it can be a case of a debtor who is a partnership. For example, we have got union partnership who is a debtor. Alright. Now, debtor account is further classified into different categories based on different criteria. Now, in our case here, we are looking at one of the criteria being the nature of the goods sold by the business in question. So what about this? You realize that under this criteria, we can have a case whereby the nature of goods being dealt with by the business, they are of trading nature. Now, these goods of trading nature are assets or properties bought with the intention of reselling them in the future, also referred to as inventory. Now, under that classification, we have got one example of a debtor, and that is a trade debtor. Now, a trade debtor is an account which is of personal nature and which represents the amount of money the buyer owes the business in question. That is, the amount of money the business will receive from the buyer or debtor in the future for selling trading goods on credit. Alright? So, for example, if you consider this ABC Limited company, which sold inventory, that is goods, on credit to Alice, amounting to $120. Now, in the books of accounts of ABC, you'll notice that you'll have a trade debtor account known as Alice account, which is actually a trade debtor. Or alternatively, according to International Financial Reporting Standards, trade debtors have been replaced with what we call accounts receivable. So we will realize that in these books of ABC Limited, either he has indicated trade debtor Alice or accounts receivable Alice account as indicated on the board. Then we look at another criteria of classifying these debtors, and that is the case of other debtors. Now, what about other debtors? Now, these are other personal accounts whereby the buyer, that is the debtor, owes the business in question and debt for selling other goods and or assets on credit, sometimes also referred to as other receivables. Now, the following sub-criteria have been used to classify these personal accounts into: number A, provision of services on credit. So if you consider the criteria of a case whereby an organization is selling or is providing services on credit, what arises from this kind of a transaction is what we call bills receivable account. Then B, we have got business selling or disposing a non-current asset to a buyer or a debtor on a credit. If that be the case, then therefore the arising account will be referred to as a non-current asset debtor account. For example, non-current asset like machinery, like furniture, motor vehicle, and so on and so on. And then the third classification or criteria of classifying other debtors is a case whereby business was promised by the debtor to be paid an amount due, which is evidenced by a promissory note from the debtor's side. Now, these are a unique scenario, but I will give a further explanation of the same. But in this case, then, we will have what we call notes receivable account. So let's move ahead and look at the summary of what I've just discussed with you shortly. Now, the summary below represents the subclass of debtor accounts that a business may have in its general ledger. So look at this. Case A, the one we are looking at as bills receivable accounts. Now, the following example will demonstrate how this recording in the books of accounts is done. So, BSC Electric Utility Services Limited provided electricity power or supplied electricity power on credit to Boniface amounting to $100. So you realize that when you check in the books of accounts of BSC Electric Utility Services Limited, you will find an account known as bills receivable under the name of Boniface account, indicated $100. All right. Now, if we go to another case, like case B, whereby the business has sold a non-current asset. In this case, we'll have a corresponding non-current asset debtor account or receivable. Now, in this case here, I've considered CBL Limited, which sold its old lorry to Catherine for $105 on credit. Now, the role you need to note that it was used by CBA as a seller for the day-to-day running of the business. So remember this one thing, that this asset was not bought with the intention of reselling. No. It was bought initially for the day-to-day running of the business. So if a CBA sells this lorry to Catherine and is on credit, then in the books of CBA, we will realize there will be a non-current asset debtor amounting to 105 US dollars. This is a case of other debtors. Then case C, we have the issue of not account or receivable. I've used an example of CAB Bank Limited, which gave Caxton a loan of 1,000 US dollar, which was payable to the bank within 2 months period. Caxton was expected to pay back this amount within 2 months period. So if this be the case, initially the entries were as follows. That is, in the books of account of CBA, we will have account receivable. That's a loan receivable account of 1,000. All right. But then the question is, where does the not payable, not receivable account come from? This arises, for example, when the client has failed to pay. So in this case here, on a failure to pay, Caxton goes ahead and requested for another 3 months grace period to clear this debt. So Caxton goes ahead and does a promise in writing using a promissory note. So a not account or a not receivable account arises when this request is granted by the lender or by the seller of goods on credit. Like in this case here, CBA has accepted to grant Caxton 3 months grace period to pay. Therefore, in the books of accounts of CBA, we will realize that the term or the account receivable will be closed down and a new account referred to as a not receivable will take the place of the previous account. And therefore, that's why we are saying that in the books of accounts of CAB, the not receivable account will be the account of the day. All right. So, with those explanations, I just want to take a simple illustration to demonstrate how the recording is done in the books of accounts of the seller who has done so on credit. So in this case here, we are looking at that at a case whereby on that 10/2022, Share Company Limited sold in inventory on credit to Faith Traders amounting to 550 US dollars. So this is recorded in the books of accounts as follows. In the sales ledger book of Share Company Limited, under personal accounts or trade debtors, you will find this kind of an account. That is a trade debtor account, that is Faith, whereby we will have the details as given there, and then a debit entry as on 3rd of the 10th month of 2022, we will have sales account with an amount translated to 550. This is just a simple example of how the recording is done in the books of accounts of the business in question when goods or services have been sold on a credit basis. Other examples can still follow and they will still take the same version like the one I've demonstrated on the board. Thank you. This is the end of this lesson. In the next lesson, we'll be looking at the case of creditors, classification of personal accounts as far as creditors are concerned. Thank you. Remember, our materials and notes are available in our website accountingnest.com. Thank you.